Hello, Robert and Alan. How are you doing today and where are you dialing from? Robert?
Hi everyone, my name is Robert and I'm dialing in from Nairobi, Kenya at the BitcoinKE, and it's a pleasure to be here.
Wonderful. And Alan, where are you dialing from?
Hello, my name is S.A Kakai. I'm also dialing in from Nairobi, Kenya, and I'm very grateful to have this platform to just talk about regulation of crypto and in Africa. So yeah, thank you very much
Thank
for hosting us.
Thank you. This is wonderful. Thank you so much for taking your time today and joining my hot seat session. The purpose of our session is to help, companies and entrepreneurs all over the world to address their blind spots and gain competitive edge. But today we're going to talk specifically about Africa. So before we dive into the topic, tell us a little bit more about yourself. Robert, you can go first. Anything about your expertise and who you are.
So, hi everyone, my name is Robert again. I'm an advocate of the High Court of Kenya, basically a lawyer, duly admitted to practice. I run a few startups in the legal tech scene. One is Sheria Online, and it's dedicated to explaining the legal clarity of the crypto assets and digital asset space. And I was recently appointed the country lead for in Kenya for the Government Blockchain Association, Africa, the African chapter, and it's a pleasure to be here. And I hope you learn a lot from this conversation. Thank you.
It sounds amazing. And Alan?
Hi guys, once again, my name is S.A Kakai. I'm the Director for Legal and Policy Affairs of the Blockchain Association of Kenya. So the Blockchain Association of Kenya is basically a lobby group that is meant to lobby for favorable policy, favorable regulation, and overall education around blockchain and Web3 from a policy-facing perspective. So for the past 8 months in Kenya, we've been engaging a lot of stakeholders, the Capital Markets Authority, the Central Bank, Parliament, with the aim of ultimately having favorable policies to allow the industry locally thrive and attract favorable investments, basically create an enabling environment for building and deploying Web3 and blockchain and crypto-based products.
Thank you. Thank you so much. And before we proceed, I'd like to address that if anyone in our audience has questions, please write them down in chat and we will do our best to answer either during live or our experts will come back to you later. So my first question actually goes to Alan. Before we dive deeper into the topic, can you address what are some current regulatory challenges or complexities, facing crypto industry in Africa?
Yeah, what are the current regulatory challenges facing crypto industry in Africa? The first regulatory challenge is a communication issue. So when the exercise we've been doing with Mocha and other people within the community for the past 8 months has led us to a rough first phase conclusion, the fact that a lot of builders, a lot of companies in Africa's crypto scene were building in silos. To that extent, these guys were not, of course, engaging regulators or engaging regulatory sandboxes. So what ends up happening, and of course we don't blame them because we understand crypto itself was built from a defiance culture and sort of guys going against the centralized. So that culture was picked up by African builders and nobody wanted to have policy and regulatory conversations. Now, as a policy expert, what happens if you as a builder or you as business owners do not want to engage government on policy that favor you? Government guys will end up sitting in a boardroom and Googling what crypto is and start developing policy based on their Google searches and their chat GPTs and all that. So you end up having policies that are no way addressing your needs as an industry. And myself and Mocha have witnessed this with the recent Finance Act in Kenya, which introduced a digital asset tax. And nobody in the crypto asset industry was consulted. This was a bunch of government guys. They went and sat in a boardroom, came up with a tax that they thought works best for the industry. But after deep analysis of the provisions, that tax ends up stifling the industry. What was the cause of that? The cause of that was that the two groups of people work in silos, where government is working on a silo, and the crypto industry in itself is also working on a silo. And this has been the case in a lot of other African countries. So apart from that, the challenge number 2 that we've noticed, and this was published in the CMA Capital Markets Authority of Kenya milestone report in 2021, is that the complexity and novelty of this technology is too hard or rather too complex for government entities to grasp, considering the fact that some of these government offices don't have internal resources and capacity to handle how fast technology is moving. You see, most innovation comes from private sector and private actors. And yes, there's a lot of education programs in, some people are pushing for education programs in Web3 in Africa and Kenya, but most of these programs ended up targeting consumers. So you end up in a situation whereby government, nobody is actually deliberately educating government on what happens or what this industry is about. So for instance, when the CMA formed the CMA regulatory sandbox, people sent applications, and I know even my friend Muoka probably sent an application there. And they ended up onboarding other Web2 products, and they never onboarded any cryptocurrency or digital asset product. And this was published in the report saying that they do not have capacity to even examine and audit what product will be onboarded. So that challenge number 2 is a capacity issue. So as BAK and as Law Society of Kenya from Robert side, we are really working towards helping government with the capacity issue. And the final issue number 3 is the communication issue with the legacy institutions. Because no industry, actually, no business operates in silos. So there's the Web3 industry, but you already have established financial institutions like banks and other companies that I will call conventional. So there has been a very big gap between how our industry interacts with the bank locally. To the point that, for instance, and this goes back to when I said Web3 was built on defiance culture. And we had a lot of these guys who call themselves DJs or crypto marketers. So what this group of guys will do is that they will go out on Twitter, on LinkedIn, and deliberately engaging, because the only way an industry can grow business-wise or enterprise-wise is engaging both regulators, but also in a horizontal perspective, engaging businesses that are already there. So this really caused a rough launch of our relationship between Web3 guys and banks and conventional financial institutions. And for instance, I can give an example of Kenya Bank Association, which formed a crypto task force. This task force was not formed to probably collaborate with the industry, no. It was formed on the need for a lot of banks were receiving complaints from their customers that they're being scammed by crypto bros or guys in the crypto industry. So the reason why the task force was formed was not even to learn and collaborate with the industry. It was to investigate the fraud and, from a forensics perspective, protect their customers. So if banks have that perspective about us, and the Central Bank of Kenya went to consult banks about regulation of cryptocurrency, you already see what banks will respond. The report will be that these guys are scammers and we should not use them. So from my perspective, those are the 3 challenges that we really need to work on. Number 1, the communication issue. Number 2, capacity building for regulators. And number 3, very strategic engagement with conventional financial institutions, be it banks, cooperative societies, or microfinance institutions. I can summarize that in those 3 key points.
Thank you so much for the salary, Alan. But my question to Robert, if you have anything to add to Alan, you're welcome. But my question to you is, imagine that we're dealing with the company and they don't really know what is crypto. They're just getting into this. Is Africa, and how it regulates cryptocurrency and blockchain technology any different from, Western countries, MENA regions such as UAE or Saudi Arabia? Robert?
Wow, thank you for that wonderful question. So yeah, definitely, in Africa, the reception of digital assets or crypto assets, that's what you should call them and not currencies, has been quite, we've seen different reactions from various stakeholders, whereby we're seeing outright bans and prohibitions in certain jurisdictions, and we're seeing the complete opposite in some jurisdictions, whereby it's totally embraced. And for me, the biggest difference between the two is, I think, what Alan just alluded to, understanding what digital assets are and their potential in the financial system. And for me, that's the first thing. These are assets, right? So when you say they're assets, it's like real estate. Real estate is an asset. They aren't currencies. They can serve as medium of exchange, but at the end of the day, they're assets. And to back my point, let's go to the US, whereby we're seeing a company such as MicroStrategy putting Bitcoin in its balance sheet as assets. Same way you can put, and this is a public list, a company that's on Nasdaq. It's listed. It's a public listed company, and it's already putting its it's putting Bitcoin and such crypto assets on its balance sheet. Same way a company can put real estate portfolios on its balance sheet, right? So that it's more of understanding what it is. And I'm sure during this session we'll delve deeper into the various jurisdictions and what it has been. But just to give an off the top, we've seen through the Financial Service Conduct Authority, which is basically the equivalent of the SEC, or in Kenya the Capital Markets Authority. And yeah, they've embraced it, and they're licensing institutions to deal with crypto assets and digital assets. And we're actually even seeing Kenyan founders and companies shifting base, and African companies shifting base. So it's all about, my point is, it's all about creating that favorable environment, because at the end of the day, these are businesses, and they'll create employment opportunities as well as increase to the countries, relevant countries' GDP. Thank you for that. I hope I've sufficiently answered your question.
Yes, absolutely, absolutely. So now I have a question to both of you, and you can expand your answers any way you want. So I'd like to know, what are some key concerns or considerations for businesses or even investors who are looking to operate in African crypto market? And maybe some of them are myths, some of them are truths. Who would like to start first? Robert?
Which are myths and which are truth. So Africa, it's we are not leading in this space. Actually, when it comes to adoption of digital assets and crypto assets, I'd say Africa, being an emerging economy, it's actually leading in adoption, especially in various countries. The world, I think it was the World Bank, if I'm not wrong, they did a report, and it revealed that, for example, in Kenya there are 4 million, holders of crypto assets, and the same is across various jurisdictions. If you're looking at South Africa, be it Nigeria, and it's because the populations understand the impact of this. They can be used as a hedge against inflation, and we can see numerous African countries, currencies, deflating, not inflating, rather, not deflating. For example, Kenya, I believe the Kenya shilling, we've seen it, lose a lot of its value. It's almost going to over 50% from 2015 up to now. And so imagine if you had 1 million in the bank and it's lost more than 1 million Kenya shillings in the bank, to be more precise, and it's lost more than half its value. The same also in shareholding, stocks of various companies that have been listed on the exchange. I'm using Kenya as an example because it's where I'm based. So for example, there was a story that ran in the media that Nation Media Group, which is a public listed company in Kenya, the shares have plummeted. So if you bought 1 million worth of shares in, I believe, 4 years ago, right now you've lost like 960,000, right? They've lost like the equivalent of 960,000 Kenya shillings. So that's what I'm saying. Africans and local Kenyans are seeing digital assets as a basically as a use case against inflation, and also all the other benefits that come along with digital assets. Thank you for that.
Thank you. Alan, do you have anything to add?
Yeah, so the question was, what do investors or companies look at when they're coming into Africa?
Yeah, what are some concerns and considerations? Yes.
Yeah. From a policy and regulatory perspective, and from what I've interacted in the past few years that we've been working in the space, is number one, a clear regulatory framework. And the reason why, as Robert has said, guys are moving to South Africa, because South Africa has developed a licensing framework. So originally, you would think that people would run away from licensing. But interestingly, given that clear regulations were developed, guys are actually running to licensing framework. So it means investors and startups actually want to operate within a licensed environment. Why will an investor or a startup want to operate within a licensed environment? Because of the doctrine of legitimate expectation. It means that I, as Kakai Limited, if I came with my exchange and paid 1 million Kenyan shillings as licensing fee, I will operate within the country. I will not get a headache from the central bank. I will not get a headache from the capital market authority. I will onboard users and advertise freely and all that. And that is why guys are moving to South Africa. And recently I was even listening to a podcast by the head of policy at Polygon, and she was mentioning that when Mika came into force in Europe, investment in Web3 went up by 25%. And I think this is now what's happening even in South African space. Ever since South Africa passed that clear regulatory framework, our Kenyan startups, some Nigerian guys, all of them are moving to South Africa. So one thing I can confidently go to the bank with is that if Kenya or any other African country would develop a clear licensing framework, that is what investors and startups are looking for, and that will attract investors. Number two is, of course, a favorable tax framework. The other reason why people are fleeing Kenya right now is because of the digital asset tax that was introduced, which does not make sense in any way, apart from the fact that it's just here to talk and stifle the industry. So if any African jurisdiction has a clear licensing framework and a favorable tax framework and tax policies, I'm very confident a lot of Web3 startups will flock into the industry. And just to reinforce what Robert pointed out, Africa is a young, ripe market. So there's a lot of opportunity in terms of use case. And I can give an example right now, for instance, ReFi, regenerative finance, and carbon credits and all that. Africa is like a hotbed for environment projects right now, and some of these environment projects are being built on around digital assets, and some of these carbon credits are being tokenized, and all this regenerative finance. So investors and companies that are aligned in terms of things to do with the environment, things to do with the sustainable development goals under the United Nations, things to do with cross-border payments. Africa is a very ripe market to try out and test some of these solutions.
Interesting question in the audience that I'd like to show here. So we have a question. Has there been any initiatives made to set up a sandbox with the aim of coming up with, Ellen? With the aim of coming up with these regulations as members of the blockchain association?
I think
what can you answer to this?
Let me just answer that quickly. So the Capital Markets Authority set up the Capital Markets Authority Regulatory Sandbox, and it's been in place for, I think, since 2019, around there, if I'm not wrong. And basically, it's been used to test innovative products and that deepen the capital markets in Kenya. And this and blockchain, crypto projects and blockchain projects, to be more precise, they definitely fit this bill. And I've been fortunate enough to be in the same room with regulators from the Capital Markets Authority, and they're really eager to onboard blockchain and Web3 products. So I'm positive and hopeful that we'll see, in the coming year, projects in the space, Web3 space, be it tokenization projects or stablecoin solution stablecoin settlement solution projects. But I'm quite hopeful because, like Alan had alluded to early on, the biggest challenge was understanding it. But I'm quite confident that the regulators have taken the adequate steps to, understand the technology, the impacts, the effects, and that's the whole point of setting up the sandbox, so whereby it can be tested for a whole year.
And so, Robert, my final question, maybe you have anything to add. What are some recommendations or just, piece of advice that you would like to give businesses who are looking to engage with the, African crypto market and are trying to navigate the regulatory, landscape?
One, get lawyers. I'm a lawyer. I'm an advocate of the High Court, and I'm definitely open for business to, talk to various stakeholders and be it investors who want to invest in the project, and invest in various projects across the continent, or even founders who want to enter the African market. And so the African market, let's just a quick snapshot. Taking into consideration the Africa Free Trade Continental Agreement, which will create the largest free trade area in the world, which is Africa, 54 nations, a population of over 1.4 billion people. So there's a huge market of opportunity, and also the digital economy is expected to grow like up to, I believe, 30 trillion USD dollars in 2030. So the market opportunity is there, and like we're seeing a lot of jurisdictions and countries setting up laws around, basically regulatory frameworks around digital assets and crypto assets. Alan gave a perfect example of South Africa. Kenya, I'd say we're working on it, so don't count us out yet. But we're seeing a lot of jurisdictions coming up with, sound, because they have to be sound, right? They're coming up with sound regulatory frameworks for digital assets, be it onboarding as well as licensing of virtual asset service providers. And I'm quite hopeful. That in the next 5 years, we'd see Africa emerging as a major player in the digital asset space, because we've seen the same happening in the fintech space. And I'd say it's the crypto assets, and they belong in the same WhatsApp group, if that makes sense.
Yes, absolutely. before we wrap up,
Sure.
Robert, do you have anything else to say about, the crypto market in Africa? Just some closing words. Anything that you haven't said but you would like to add?
Definitely. I see, a bull run happening. There you go.
Oh, Alan is
Alan,
back. Okay, Robert, you
yeah,
can proceed, and then Alan will say
sure, sure.
something.
I definitely see a bull run happening in Africa, in the continent, in the next 2 years. A lot of projects. I personally have been involved in the ecosystem. I've got to meet like a lot of wonderful people, both founders, people building amazing projects, solving real world problems, be it in healthcare, real estate, identification, and the list goes on. We could stay here the whole night, but we'd rather not. So we're seeing a lot of that, and also venture capital interest. We are seeing a lot of venture capital is setting up in Kenya. To give you an example, Kenya, especially with the Nairobi Finance Institution, right? So we are seeing a lot of interest in the region. So I'm quite hopeful, and I'd advise everyone to keep an eye out. And to the investors, definitely invest in the various projects, and to the founders, keep building and solving real world problems for us and future generations. Thank you.
My parting shot was that following the recent Morocco G20 summit, the key recommendation was that African countries should work more towards developing a clear regulatory framework for digital assets and crypto assets. So in the next 6 to 12 months, or probably 6 to 18 months, we're going to see more and more African countries building regulations, or rather pushing for regulations around digital assets.
Thank you so much, Alan. Well, that's the end of our session for today, and I really enjoyed having this conversation with you. I learned a lot in just 30 minutes that we were talking today, so I really appreciate it. And I hope if our audience enjoyed this conversation as well, I really encourage you to check the caption and see how you can work with Robert and Alan to solve your business problems. So again, thank you so much, Robert and Alan, for dialing in today, and I hope you're going to have a great rest of the day. Thank you.
Thank you for having us, Kate. And for the people who are really interested in seeing the various what's happening in the various jurisdictions, kindly log on to Sheria Online. I'll share the link with Kate, who can share on the Gleek platforms. But we have a robust blockchain and crypto asset article sections whereby we delve into various what's happening in various jurisdictions in terms of regulations of the digital asset space, and also check out for future events in collaboration with Gleek and the Blockchain Association of Kenya. And thanks for having us, and goodbye.